right, traders and investors, this is Vishal from Equity Guru, and it's all about the banks, right? The regional banks, that's what we've been hearing about in the United States. Well, sort of scratch that because it's not just regional banks. Of course, in Europe, we heard about Credit Suisse, one of those weak banks that many people think is going to be the next too big to fail bank. You always hear it between Credit Suisse or Deutsche Bank. But it looks like, central bank action and regulator action is coming in and stepping in to protect these banks. And again, folks, technically, what the regulators are saying is that this is no bailout because, shareholders and creditors aren't going to be bailed out. They're not going to be saved. They're going to let the prices of the stock fall. And it's all about, protecting the depositors. To ensure that they're allowed to get their money, from the banks, get it out of the banks. So this has caused, obviously, some changes now in what markets are thinking is going to come with interest rates, because a lot of this is sort of stemming from the fact that perhaps interest rates are too high. You're not seeing as much deposits in the banks. You're not seeing much lending from the banks, which is hurting the financial sector as a whole. And going forward, it does seem like a lot of the market is thinking that we're now pretty close to the end of this interest rate cycle, given what might happen if interest rates continue to go higher with the activities that we are seeing here in the banking sector. Firstly, let's talk about Credit Suisse just very, very quickly. This happened to kick off this week where we just saw Credit Suisse hit all-time record lows. There was a big bid, of course, as this rescue package came in from the Swiss National Bank. But, we are seeing still some red here on Credit Suisse. And honestly, again, when it comes to the technicals, we look for either a range to develop to basically showcase some sort of exhaustion of selling pressure. And really, we'd like to see it close back above this $3 level for Credit Suisse. So, I will be personally watching Europe. At the time we're recording this, just a few hours ago, we heard that the European Central Bank actually increased interest rates by 50 basis points. So 50 is a number that not many people were expecting. They're thinking perhaps a 25 basis point hike. I think the Fed is likely going to do, a 25 basis point hike as well. But the action that we are seeing in the bond markets are sort of showing that the markets are thinking that rates have sort of peaked. And I mean that because, we saw this really, really big drop in yields, which occurs when money is running into bonds. So there is this whole idea that perhaps money was buying bonds for this risk-off movement. However, I like to look at other assets such as, the VIX and also the US dollar at the same time. If you see the dollar rising, if you see VIX rising, and then you see a move into bonds, it generally means that, yes, people are freaked out. They're running into risk-off assets. If we quickly look at the dollar, there was a bit of a bid, but the dollar's not jumping on the day that, you're seeing a bid into bonds as well. And if we look at the VIX, that's sort of been a roller coaster, but it's always been a roller coaster where we saw the volatility and fear sort of pick up. And you can see it's sort of declining on the day where money is running into bonds as well. So I think this is more of the market now saying, hey, we're near the top of this interest rate cycle. And obviously, if we're at the top, you want to buy the bonds now that are yielding this high amount if you think, we're either going to stay here or if rates are going to go low. So, keep all that in mind with this, with the banking crisis. I guess some people are saying that the financial system was already beginning to break here, and that means that central banks won't really be, the Fed in this case won't really be putting the foot on the accelerator pedal here anymore. They'll maybe pause, or like I said, likely a small 25 basis point hike. And in the next meeting, they'll probably talk about what they're seeing with the financial sector and why they might have to go back to, assess. And again, this whole pragmatic approach where it's data to, a data by data basis. If we took a look at the stock markets, again, folks, we've been talking about these market charts for quite some time. I've always been saying that there's these support levels on all the markets, really. The S&P 500 has this major trend line which has more than 3 touches, which is why I think it's a valid trend line. You can see here this week we were actually retesting it. There was a bit of a breakdown, but not a very strong breakdown. And again, I always talk about the strength of those body candles. You don't really want to see this sort of spinning top type candle. That's sort of the technical term, where you have all these long wicks and a red body there. It's usually an indicator that there's this battle between the bulls and the bears, not necessarily the bears are winning. And then you can see here that, we've closed back above that trend line. We even saw moves back below that trend line, but we're bid up. So we do know that there is a group of buyers here, and in my opinion, validates this trend line as a long. So from here, probably some people are putting some stop losses below these lows and are expecting to see a move higher like this, I guess, based on central banks giving up, I guess, or not giving up, but pausing because of all the pressures in the financial system. The NASDAQ, this is the one that's just been on fire here. We've talked about this major support zone, the 11,900 to 12,000 zone, for quite some time here. Market just never broke below it, which is why I've always said, I can't turn into a bear just yet, because we have this support which needs to be taken out. And now I think there's some people that are looking at, this sort of wedge pattern that's formed here, and we've just closed above that. So technically, you do have this buy signal here now on the NASDAQ, although I would personally prefer a close above these recent highs here at 12,725, just for that confirmed breakout and then ride that. But the NASDAQ looks very, very bullish as it holds its support from, again, a technical analysis perspective. And the next two charts of the Dow Jones and also the Russell 2000, this is where it can get a bit interesting. Although on the Dow Jones, we do have a similar trend line, which, you can, again, just connect the highs there, which is similar to what we have with the S&P 500. Although there's this support level here at the 32,500 zone, which I didn't like that breakdown, because that is akin to, some sort of double top, maybe even a triple top pattern here. We got that close. Not the best, but you can see here now we are getting a nice bid after multiple days of a range here, right? So when you see this, especially in a breakdown, it's not usually a sign that the breakdown or the trend, the new trend, is strong, because obviously you'd like to see the momentum continue. But I'm really curious now to see what will happen once we retest this 32,500 zone. And if we can actually close above it on the Dow Jones, that would be a very, very bullish sign for all the equity markets in general. If we look at the Russell 2000, this is the one that, had sort of the alarm bells ringing because of this breakdown we saw a couple of days ago. And it got my alarm bells ringing just because this market tends to lead the other equity markets. And you can see when we had that breakdown, the other markets did also follow, but we are also seeing that range after this downtrend. And it is at a very important support level here as well. Some people might draw their support here lower, but you can see there's been multiple touches here, right? 1, 2, 3, 4, 5, 6, 7, 8, and now our 9th touch. So I think this is a very, very important support zone. And perhaps from here, we can see a nice relief rally. Although, from a technical perspective, we would want to see a close back above this 1875 zone on the Russell 2000. So again, folks, dollar a bit lower. It's still, again, it hasn't broken below that 103 level, which we've talked about in previous videos as well, which is technically what's holding the uptrend still intact. We are seeing a bid in bonds, which is bringing down yields, although I do not think it is a risk-off move. Maybe it's more of the market here now beginning to price in that the Fed is very close to the end of this interest rate cycle. And then again, the volatility index here also falling after some volatility, right? After some fear here, but nothing really indicating this major risk-off move as of yet. And obviously you can see from the move in the equity markets, the risk-on move is still in play especially with that NASDAQ. So some very bullish looking charts, and this is again something we've talked about with the technicals in previous videos. We trade the markets we see, not the markets we want to see. And as long as those support levels still held, we were technically bullish on the markets. And it does look like the NASDAQ here is actually the most bullish and is going to adhere to my technical analysis pattern here with the breakout and likely move back up here to the 13,500 zone. Black Swan, that's still there. Perhaps we haven't seen the end of this so-called banking crisis. Again, watch the European banks, especially after today's 50 basis point rate hike, and we'll have to see, what happens in the next few days here. But from a technical perspective, as I said, everything here on the market side of things looks bullish, and we aren't seeing this risk off just yet. But that's it for me, folks. If you enjoyed this video, give it a thumbs up. Be sure to follow and let me know in the comments below if you think this is a buy the dip opportunity here and we're going to see amazing rally, or if you think that the banking or the financial sector crisis is just in its early stages and we're going to see another big bang perhaps hit the fan and lead to lower equity markets here in the future. Let me know in the comments below, and I'll catch you guys all in the next chart attack video.